Okay, hey everybody. So I'm coming to you from the brand new international headquarters of the Financial Pathway Studio. I am in a new location. We just recently moved here. We're still in the Pensacola area, but moved from our old place here just this week. So I got a new setup. I got my same decor, but in a new room, new space. And so we're excited. It's been a busy season for us, but we're happy to have the move behind us and everything went well. And so this is the end of the month. This is June 30th, so it's time to do a Money Minute update. So I want to give you a quick rundown of some of the topics that are going out in the Money Minute email today and hit on some of the most important or interesting articles that I've seen over the last month. So we're starting out with the crypto crash of 2022. If you have bought crypto, I'm not telling you anything you don't know, because if you got it on Robinhood or Webull or Coinbase or wherever you happen to purchase your cryptocurrency, you've noticed it's down, and it's down big. Stocks are down to start this year. Bonds are down to start this year. But to say that crypto has been hit hard, it feels like an understatement. I mean, it has just been demolished to start 2022. And I don't say this to like rub it in. It's just, I think it's probably the biggest thing happening in the world of finance right now, or at least maybe the thing that's getting the most eyeballs. Bitcoin has fallen over 70% from its 2021 peak. That is a massive turn in just under a year's time. And the crypto market as a whole has lost over $2 trillion in market value. It hit around $3 trillion. Now it's back down to about $1 trillion. So that is a massive loss. And the question that really we have to be wrestling with at this point is this the end of crypto? Are we seeing the beginning of the end of just a speculative bubble? Or is this just a blip? Is this just a speed bump on the inevitable road to crypto being a part of our daily lives? And so it's hard to say at this point, and it'll be interesting to see how the rest of this year plays out. Is crypto going to make a rebound? Are we going to see an uptick, or are we just going to continue to see this massive slide go farther and farther down? I'm not sure, but we got an article on that. That's going to be the first article on the email. Another interesting one I saw was house flipping algorithms are coming to your neighborhood. Real estate investing has gotten really popular in the last few years. I think more than ever, it's just in people's minds. It's in the zeitgeist. There's people that view real estate as an investment more than any other time, at least in recent history. And part of that is you have a lot of individual investors, but you got a lot of big players that are trying to get into this space. You got companies like Zillow, Open Door, that have tried to kind of start their own massive real estate buying ventures because they feel like their competitive advantages, they've got the numbers, the size, the scale to buy many, many properties. And they've got the algorithms and the numbers and the spreadsheets to do it. And the interesting thing is that so far, the iBuyers, as they're known, haven't done very well. They've kind of treated this more of like a spreadsheet, an Excel spreadsheet, as far as where to buy houses and at what price and all that sort of thing. But it hasn't worked out very well. And so the question is that sustainable? Will iBuyers and these massive real estate investing companies be able to turn a profit long term? So it's a really detailed article, and I found it very, very intriguing. Another article, third article, is when bonds don't hedge stocks. I've been having this conversation with a lot of people just recently. 2022, as we just mentioned, has been not a great year to start. It's been bad news all across the board. Stocks are down, bonds are down, crypto is really down. And usually bonds are the safe investment. They're the ones that are supposed to be your flotation device when the stock market's going down. So the playbook for a long time has been buy or construct a portfolio that is roughly half stocks, roughly half bonds, maybe 60% stocks, 40% bonds. And that way, during the times when the stock market is going to be down, because it will be, that's just going to be inevitable, the bonds will be staying put. Maybe they'll be actually up a little bit. And it's going to lessen your volatility, and you'll still have a strong return over time. And that playbook has worked for a long time, but in 2022, it has not worked. And a lot of what we call quote-unquote balanced funds have been hit really hard because the stock portion is down, but the bond portion is also down, so they're getting hammered on both sides. And the question is, what gives? Why is this? And it really comes back to inflation and interest rates. When inflation hits hard, when interest rates start rising, the pool of money that's available in our economy starts to shrink. And when that happens, earnings from companies start to shrink as well. And if earnings go down, the stock prices are going to go down because stock prices are tied to earnings. If a company is projected to make more money in the future, then their stock price will continue to go up. But if the earnings go down in reality, or the forecast goes down for what they think earnings will be in the future, then the stock price is going to go down. So it makes sense. I think that one's a pretty easy one to see that, yeah, when inflation and interest rates are going up, it's not going to be good for companies and good for stocks. But the bonds is the one where it's like, that's a little bit harder to understand, because when interest rates are going up, that's actually bad for bonds. Let's say you have a bond that's paying 2% interest. Well, as long as you hold onto that bond till the end of it, if it's a 10-year bond, you hold it for 10 years, it's going to keep paying you your 2% interest. But what happens now if interest rates go up and you can go get a new bond for 2.5% or 3% interest? Well, comparatively, your bond doesn't look as good. It's not as attractive to other investors. If they can get a bond that pays higher interest, why would they want your bond that pays less? So you can still sell your bond on the open market, but the price that you're going to fetch for it is going to be less than what you could have sold it for previously. And so bond prices are going down. The yields on the actual individual bonds are staying the same, but the market value of the bonds goes down. And so there's a great article on that if you want to kind of dig into that a little bit more, and what should we do about it? How do we even respond in a scenario like this that's kind of unusual or not a typical situation? And then the fourth article, I just feel like I always have to throw something in about Tesla. I promise I'm not doing it on purpose, but I just find it so intriguing. But this one I had to include. Tesla's building robo-taxis is what they're known as. I've never ridden in a Tesla before. I don't know what it's like to experience self-driving mode and kind of the anxiety behind letting a car just drive it yourself. But at least with Teslas in self-driving mode, you still have the steering wheel, you still have the pedals. Like, you feel like if you need to take over the car, you can still do that. With these cars, though, Elon Musk has just announced that they're going to put these robo-taxis out. They don't have a steering wheel. They don't have pedals. There is no human controls to this vehicle. It is completely, truly autonomous, self-driving. And he says they're going to be out by 2024. That's their prediction. That's what they say they're going to be out. I don't know if that's going to be true. There's going to be a lot of obstacles to that. Number one, probably the biggest, is the legislation. Like, there's not been clear legislation on self-driving cars and laws around that. So that seems to be pretty optimistic to say it's going to be out by 2024. But again, it just goes to show that it's really inevitable that self-driving cars are the future. It's just a question of how long it's going to take for it to become the norm, and that'll be a weird experience, I'm sure. They didn't give much more details beyond just the fact that they want to put out robo-taxis, actually truly self-driving cars here within a couple of years. Popular posts this month from Facebook. There was two that I highlighted in the email. One, you have to see the picture. It's a concept. It's not actually been implemented yet, but it's a concept for a double-decker airline seating arrangement, and the picture is just bonkers. It elicited a lot of strong opinions. So if you haven't seen that already, check that out. You can go on Facebook or check the email. But it would be interesting to fly that way. To me, it comes down to, it's not ideal, but if the price were significantly less, I may be talked into riding this way. I'm not totally sure yet. Then the other one was about the Costco hot dog combo. For some reason, I didn't even realize this until recently, but the Costco hot dog combo has been $1.50 all the way since the 80s, and they have not changed the price at all. So as inflation continues to rocket out of control, Costco still continues to hold firm on their $1.50 hot dog combo. So when all else in the world is going wrong, at least we have the Costco hot dog combo. And then the last one is, if you didn't hear the earlier episode, how much life insurance do you need? I put that out earlier this month. Really important question, one that everybody's got to look at some point. Not everybody needs life insurance, but most people do. The big thing that people get hung up on is how much life insurance? How do I quantify that? And that episode's going to help you. You can understand, number one, do I need life insurance? But also, how do I come up with the right number for the proper coverage? And if that's something you have not done, or if it's been on the back burner, if it's been on your list to do, go check that episode out, listen to it. It'll be helpful to you, and make sure you get that implemented very soon. Last thing, I've got another interview podcast coming out next week with my dad, Kurt Skelly. So he was my first guest way back, and I realized it's been like 2 years since I've had him to be back on the podcast. So we recorded something a couple weeks ago, and I'm going to upload it on Tuesday. So I know you're going to enjoy that. We're going to talk about staff compensation for churches, a lot of good insight that my dad shares, and I think it'll be a really helpful episode. So look for that. That's going to drop on Tuesday. July 5th. So there you have it. That's the Money Minute update for June 2022. Until next time, I'll see you on the next episode of the Financial Pathway Podcast.